Don't let the news of peace deceive you. While the world cheers for a potential US-Iran breakthrough, a financial massacre has just unfolded across the trading floors of London and New York. Why is the best news for humanity currently the worst news for your portfolio? How can gold and silver collapse right when a conflict ends? The truth isn't found in the headlines of peace. It lies within a perfect liquidity trap that has just been sprung. To understand why you just lost money, we have to look at the most dangerous weapon in the market: crowd psychology. For decades, gold has worn the crown of the safe haven. It is the ultimate insurance policy. When bombs fall or warships move into the Strait of Hormuz, investors don't buy tech stocks, they buy gold. They buy because they are terrified. This fear creates a massive risk-off sentiment, driving prices to record highs as everyone rushes for the exit at the same time. But here is the irony. Gold thrives on chaos. When the headlines suddenly shift toward US-Iran peace talks or diplomatic breakthrough, that insurance policy starts to feel very expensive to hold. Think about it. Why would a hedge fund manager pay to store bars of gold when they could put that money back into the S&P 500 or high-yield bonds now that the threat is gone? The moment the fear evaporates, the safe haven premium vanishes with it. This is the fundamental mechanism of the gold market. It prices in the disaster long before it happens, and it sells the relief the second it arrives. This brings us to a concept that separates the amateurs from the professionals. Buy the rumor, sell the fact. The rumor was the escalation. For weeks, the market whispered about a potential blockade or a strike. During that time, the price of gold climbed steadily. Smart money was already positioned. But the fact was the peace talk announcement. To a novice investor, news of peace sounds like a reason for stability and growth. They see the headline and think, the world is safe now, everything should be fine. But to the professional trader, that headline is a liquidity event. They know that thousands of retail investors will see that same headline and think the uncertainty is over. But the fact is already baked into the price. By the time you read the news on your phone, the big players have already started hitting the sell button. They aren't selling because they hate gold. They're selling because the objective of the trade, the fear, has been achieved. They're locking in profits while the crowd is still trying to figure out what the headline means. This is why we see these violent red candles right when the news seems most positive. It's a psychological reset. The market is clearing out the weak hands, those who bought at the top out of FOMO, fear of missing out, and now are forced to sell out of FOP as the price dips. But is this just a natural reaction to peace, or is there something more calculated happening behind the scenes? You see, for the price to drop this sharply and this quickly, someone has to be doing the heavy lifting. Someone has to be dumping massive amounts of paper gold on the COMEX to trigger the cascading stop losses of retail traders. While you are staring at your screen wondering why peace is costing you 5% of your portfolio in a single day, the algorithms are already moving to the next phase. They're looking for the exact price point where your panic becomes their opportunity. Because here's the cold, hard logic of macro finance. Peace might lower the temperature of the geopolitical room, but it doesn't fix the underlying rot in the financial system. It doesn't erase the $35 trillion in US debt. It doesn't stop the printing presses. It simply provides a momentary distraction, a psychological breather that allows the big players to reaccumulate assets at a discount. So the next time you see a peace breakthrough headline and watch the gold chart start to bleed, ask yourself, is the gold actually worth less today than it was yesterday? Or are you simply watching a masterclass in market manipulation designed to shake you out of your position?
To find the answer, we have to look deeper than just the headlines. We have to look at the shadows. We have to look at how the ka-mop, the sharks, are using this exact moment of relief to prepare for the next strike. Because, as we're about to see in the next section, what looks like a crash to you is nothing more than a liquidity grab to them. But is everyone actually selling? No. While you're cutting your losses in a blind panic, there are hands of steel quietly picking up your gold for 5% cheaper. Welcome to the invisible hunt, the liquidity grab.
To understand this, you have to stop thinking like a retail trader and start thinking like a central bank or a billion-dollar hedge fund. These sharks have a massive problem that you don't have: size. If a major institution wants to buy 10 tons of gold, they can't just click a button. If they try to buy that much when the market is quiet, they will drive the price up against themselves. They need a sea of sellers to fulfill their buy orders without moving the needle. And where do they find that sea of sellers? Right at your stop-loss levels. The sharks know exactly where the weak hands have placed their safety nets. They are usually clustered just below major support levels, those psychological floors like $2,300 or $2,400. To the big players, your stop-loss isn't a safety tool, it's a sell order waiting to be triggered. This is where the peace talk headlines become the perfect weapon. The news provides the narrative cover. As the price starts to slip on the news, retail traders get nervous. When the price hits those support levels, a chain reaction of stop losses is triggered. Thousands of sell orders flood the market at once. The price flash crashes. To the untrained eye, it looks like a disaster. To the shark, this is the golden hour. This sudden surge of forced selling provides the massive liquidity they need to fill their huge buy orders at the lowest possible price. They aren't just buying gold, they are harvesting it from the fearful. History proves this isn't a theory, it's a repeatable playbook. Let's look back at the 2015 Iran nuclear deal framework. Leading up to the announcement, gold was volatile, hovering under immense pressure. The moment the breakthrough was announced in Lausanne, gold dipped sharply as the peace premium evaporated. Retail traders bailed, fearing the end of the geopolitical risk era. But look at what happened next. The crash lasted only days. While the headlines were busy celebrating diplomacy, the smart money was busy accumulating. Why? Because the structural problems, global debt, currency debasement, and central bank distrust didn't go away just because a document was signed. Within months, those who sold in a panic watched from the sidelines as gold began a multi-year climb. We saw it again in various de-escalation phases of the Russia-Ukraine conflict. Every time a grain deal or a ceasefire talk made the front page, gold took a sudden, violent hit. Each time, it was a liquidity grab. The sharks used the temporary peace to flush out the speculators before the next leg up. You have to ask yourself, why are central banks in China, Russia, and India buying record amounts of physical bullion while the paper markets in the West are screaming sell? It's because they understand the difference between price and value. The price is what you see flickering on your phone, a number easily manipulated by high-frequency trading bots and headline-driven algorithms. But the value is determined by the total collapse of trust in the $35 trillion U.S. debt pile. The sharks are using the U.S.-Iran peace talks as a smokescreen. They want you to believe that the world is becoming a safer, more stable place so that you will let go of your hard assets. They want you back in the dollar, back in the banking system, and out of the one asset they can't print more of. This is a forced liquidation of the middle class. By triggering these stop losses, they transfer wealth from the person who reacts to the news to the person who understands the cycle. So here is the twist you need to wake up to. The more positive the headlines become, the more dangerous the trap for the uneducated investor. If you're selling because you think
peace makes gold useless, you're playing right into the hands of the people who are currently buying your gold with a smile. But how do they keep this illusion going? How do they ensure that your brain continues to make the wrong choice every single time? To answer that, we have to move beyond the charts and enter the world of neurofinance. We need to look at how your own biology, your amygdala, is being hacked by the market to make sure you stay a victim of the liquidity grab. If you think you're in control of your trading decisions, this next section is going to be a very uncomfortable wake-up call. If you think you're in control of your trading decisions, this is going to be a very uncomfortable wake-up call. Because the truth is, the market isn't just fighting your wallet, it's fighting your biology. Welcome to the world of neurofinance, where your own brain is programmed to betray you. When you see a peace talk headline followed by a giant red candle on the gold chart, something happens deep inside your skull. This is the work of the amygdala, the brain's ancient alarm system. In the wild, the amygdala kept us alive by triggering a fight or flight response when we saw a predator. But in the modern financial world, that predator is a falling price line.
When you see your portfolio turn red, your amygdala doesn't see market volatility. It sees a threat to your survival. It floods your system with cortisol and adrenaline, screaming one command: run. This is why you sell at the bottom. It's not because you're a bad trader. It's because your biological hardware is prioritizing the immediate relief of ending the pain over the logical benefit of holding for the long term. The sharks in the high-frequency algorithms know this. They don't just trade gold, they trade your adrenaline. They create the red to trigger your flight so they can be the ones to catch you when you fall. This is the brutal reality of the wealth transfer. Vang, or gold, almost never loses its intrinsic value. It simply moves from weak hands to strong hands. Weak hands are governed by the amygdala. They react to the news, they panic at the red candles, and they seek the safety of the herd. Strong hands, the central banks, the sovereign wealth funds, and the ultra-wealthy are governed by the prefrontal cortex, the part of the brain responsible for long-term planning and logic. They know that while the peace premium might fluctuate, the structural reality of the world remains unchanged. Look at the macro picture that the headlines want you to ignore. We are currently staring at a $35 trillion U.S. debt bomb. Does a peace talk between the U.S. and Iran fix the fact that the U.S. government is paying over $1 trillion a year just in interest? Does it stop the global trend of de-dollarization? Does it stop the massive inflation that has eroded your purchasing power by 20% in the last few years? The answer is a resounding no. The temporary dip you are seeing in gold and silver is what we call a short-term noise and a long-term signal. We are in the middle of a massive multi-year debt cycle. In every historical debt cycle, there comes a point where the currency is debased to the point of no return. During those cycles, gold doesn't just go up in a straight line. It breathes. It corrects to find new liquidity. Think of it like this. If the U.S. debt is a burning building, the peace talk news is like a small rain shower. It might dampen the flames for a minute, but the foundation is still turning to ash. The smart money isn't selling their gold because they think the building is suddenly safe. They are just stepping back to let the panicked crowd trample each other at the exit so they can buy the ground underneath them. This is the difference between news and knowledge. News tells you that gold is dropping because of peace. Knowledge tells you that the debt-to-GDP ratio is at its highest point since World War II, and that no amount of diplomacy can print our way out of a mathematical reality. So when the screen turns red and your heart starts to race, you need to ask yourself, who is in charge right now, my amygdala or my logic? Because the sharks are betting that your biology will win every single time. They are counting on you to see this peace dip as a reason to exit rather than the final opportunity to enter before the next leg of the debt crisis begins. As we wrap up this analysis, remember, The market is designed to be the ultimate counterintuitive machine. It rewards those who can remain calm when the world is screaming, and it punishes those who confuse a temporary headline with a permanent reality. Now that we've unmasked the trap and decoded the brain, what is the final move for the Stay Alive portfolio? Let's conclude with the one question you must answer before the next trading day begins. The red candles you see on your screen today aren't a sign that gold is over or that the bull market has died. Instead, what you're witnessing is a necessary cleansing. The market is taking a breather to flush out the impatient, the over-leveraged, and those who trade based on headlines rather than math. Remember this, news is often just a convenient excuse for what the big money already planned to do. The US-Iran peace talks provided the perfect narrative cover for a massive liquidity grab. But while the news cycle moves on to the next headline tomorrow, the underlying truth remains. The global debt supercycle hasn't changed. The $35 trillion debt bomb is still ticking, and the smart money is still quietly accumulating on every dip. In this game of high-stakes finance, the most valuable asset you own isn't the gold in your vault or the silver in your safe. It's your ability to remain rational when everyone else is reacting. Success in the markets doesn't go to the fastest person to read a news alert. It goes to the person who can see the trap before it snaps shut. So the next time a peace breakthrough or a diplomatic miracle causes the market to bleed, I want you to stop and breathe. Look past the fear, ignore your amygdala, and ask yourself one simple question. Is this the end of the trend or just another hunt for liquidity? Will you be the one selling your future at a discount to the sharks, or will you be the one calmly observing the trap from the sidelines? I want to hear from you. What is the key price level you're watching for gold to bounce back? Is this a genuine turn toward peace or just the calm before a much bigger storm? Drop your thoughts in the comments below. I read every single one. Don't forget to like and subscribe to stay one step ahead of the noise. Until next time, stay sharp, stay patient, and keep your eyes on the data.